the euro US dollar. This is the 15 minutes of the euro US dollar. And I assume that we have now a 5-wave structure underway. We have 1, 2, likely 3 ending here. We are now engaged in tracing a tiny 4th wave. And as I'm talking to you, it is right now at, let me just get it here. It is at 111.68. Okay, so I think it is on its way in a march that will carry it towards 111 even, maybe slightly lower, before we see a more substantial correction to this decline. The one question mark that is hanging over the price action, the interpretation that we have here is this: where do we have the end of the 5th leg? Here or here? If it ended here, then the prospects for another one to immediately rise. If we end the 5th leg here, there is no issue really. It starts with a clean slide, although you have a failure 5th. You see that? So this is something that is going to be resolved by Mr. Market by simply providing us more data as we go down. So there is no point pulling hairs and spending hours and hours and hours trying to sort out this. It is a fight that we just don't have to face up to it now. We just go along with the flow right now. We do have a structure of 5 legs building up here, and we will get our answer as we get more data. That's the way I go about it. Now overall, you can see that here's the daily. It's basically the buying power evaporated, and now it is on a steady decline. It's coming back. I do not expect, certainly not in a violent way, I do not expect a surge like that. Not anytime soon, unless there is some extraordinary trigger which I can't foresee here. Otherwise, I expect it to continue to be weak and eventually continue down towards the floor at 108. Okay, here's the US dollar Swiss. That's the 2 hours chart, and here we face similar structure as it is attempting to come back here. It's a bit slower, but nevertheless on the 2 hours chart we are seeing a 1, 2, 3. It's probably now engaged in tracing a tiny 4th wave. It should not break under this orange line, otherwise it's going to kill the idea that this is a 1, 2, 3, 4. And again, we are facing some dilemma like we had in the case of the euro US dollar. Do we have here a C ending here or here? Not very clear. Not very clear, but I'm pretty convinced this will become clear as we get more price data. And of course, if we climb above this level, the level that I mentioned on a number of occasions, right here, just above 98, okay, we'll be doing much better. I'm talking about the bulls. We will be doing much better, as this will almost cement the idea that we do have a firm bottom here, and that will be the next step. Okay, euro Canadian dollar, that's the 2 hours chart. It's going all over the place, but in essence I do not see at this point in time any reason to change the wave count. I still like my 1, 2, 3. I'm not changing it, and I'm not getting out of my shorts. I'm leaving them at this point in time. Right now, as I'm talking to you, is at 148.17, and I think it is engaged in tracing another ABC. Let me show you here. This is an 8, that's a B. It appears to me that this is a C. So yeah, it could rally a bit more. I think that ended up being an ABC. We could have an ABC here. I do not want to rush and put exact labelings as to the wider scope here. I told you that I will get worried concerning my short positions if we get a rally above this level and it begins to build a base here. Then I would definitely get worried, and I would think that maybe I missed something. But right now I would leave it as it is. It appears to me this is still in the zone of 4th wave, and that's all I have to say at this point. Okay, this is the pound US dollar. That's the daily waterfall decline. Now let's be absolutely clear, this is a make or break level for the pound. Okay, the pound breaks through that, continues to be weak, completely forget about any upside. It's going to really crush to the floor, and worse. Okay, much worse. If it goes back in a miserable decline towards the floor, it's not going to stop there. We're not going to have this after that, you see. We are probably going to have something like that, and eventually further decline. So this is really now really critical. The pound may be in the process of introducing here the other shoulder. Do you see what I'm saying? That's one shoulder, that's a head, and that's another shoulder. It's quite possible, but it's got to rise vigorously now. It's right now at 141.42. I have not given up completely on the pound. We have seen the divergence on the weekly. Here's the daily. You still have nice divergence here, but it's it hit overhead resistance here. It was a bit too much for it, and it came down. So this is critical. If this holds, it begins to rally back above the 50 moving average, then yes, definitely there is hope. There is hope it could translate eventually into a third wave. But let me emphasize immediately, this is not high confidence. Okay, it's not high confidence. We do need a price action to confirm this hypothesis. Okay, that would begin to look like the right thing, and then a lot higher. Okay, so that is basically the idea. Okay, this is gold. This is the daily, and I warned you that as soon as it breaks the line here, it's over. It's weak. It is, in my opinion, still likely to continue lower. It's right now at 1218.93. The momentum was already not there. You can see the momentum of the daily. Momentum was not there for a huge run up. It gave already a lot in this big swing. And now the bulls have basically one recourse, and that is the recourse of a correction. Okay, so we at this point in time, I'm taking this as a 1 2 1 2 3 4 3 4 5. Yes, I can claim that I have 5 waves here. I mean, I have 5 waves from the bottom, and I think that this is probably an A. That's a B. We're getting down in a C. Now there should be no problem in this ABC idea. Let me show you here the daily a little bit. I mean, yeah, we could shoot down there, yeah, fine, but any sinking lower is finished. I mean that the bullish potential would look really shaky. Okay, the sooner it bounces back from 1200s, and when I say bounces back, that's what I have in mind. In fact, I see here an AB 1 2 3 4 5. Okay, if it bounces back from roughly the 50 moving average zone, something like that, to mid-range, that already is quite reassuring as far as the bulls are concerned. In general, I'm not pessimistic on gold. I'm not pessimistic on silver. I think there might be just trailing. You know, silver, we have discussed it before. There might be trailing behind the other commodities and currencies that are a bit ahead in this bullish development. But all in all, I am not bearish at this point. Short term, you have to allow for further weakness. As you can see here, that's the 60 minutes with a possible A, B, 1 2 3 marching in place for a session or two, and then another plunge. Okay, this is silver. Without going down into providing very detailed labelings here, I would like to see absolutely silver staying above 14.5. I mean, it's better if it stays above. I mean, if it bounces back from high level, that is always better. But I've already discussed on a number of occasions the idea of a huge rounding bottom here, and that, for example, could prove as an excellent shoulder head. We could be going nowhere literally for a while. Do you see that? And then we come back up here, and then you have another possibility for another head and shoulder, with this being a shoulder, that's a head, and that's another shoulder. like that, preparing the ground for a massive return of silver into the bullish camp. That is also working on the principle of symmetry. I in my long in the many years that I've been looking at the markets, I also read a lot of books, and I just don't remember now the guy who wrote this book, but there was a guy who wrote, and I've got it here, if you're interested, mention that to me, a guy who wrote a book about symmetrical patterns in the markets, and he shows some amazing examples throughout the years, purely from a charting perspective, showing you that, for example, in this case, I would imagine he would jump and say, hey, you see that? We are going now to replicate basically what we had here. And that's how he would go about it. And the examples that he has in his book, they're really astonishing. So who knows, maybe we are going in this direction now. Okay, this is Treasury yields, 10 years. We are coming to a critical point in time here. Critical, absolutely. Are we going to get our answer? Is that an ABC done and it's going to crash, or we are still with the dilemma of 1, 2, 3, 4? I begin to suspect this is an ABC. I already told you this is my preferred reading. What I saw in the EUROBUXL, in the German long bonds, and what you're going to see in the 5-year notes is really strengthening the idea that we are dealing here with an ABC. So what it would take in the case of the 10-year yields is, as you know, a crash through that, and then this becomes the target. It's really serious. It's also in terms of trading, it's a serious potential, fantastic potential for trading. So here you are. We took quite a big step yesterday by the market turning down sharply. We need continuation, definitely. We might get it today, and it's not that much of a mystery. Stocks are falling. And as you know, stocks, bonds, they often have inverse relationship, and bonds are rising. It's something we have been used to for a long time. This is the daily of the 5-year notes, okay, the treasuries, and here we go again. A, B, C, 1, 2, 3, and the reversal. Break through that level of 1.3, and it's all done. It will have serious negative implications as to the bull in yields. Okay, it will be fabulous news for those who are looking for notes to rise. Such a break would definitely have serious negative implications for months to come. Here's the June futures contract. That's the 4 hours chart. And you know that I've been beating the drum of the ABC for a long time, and this is the idealized shape of what I had in mind with a reversal here, and it could just about happen today. It could just about be triggered today. Where is it right now? Yes, it is attempting follow through here. Not yet something, earth shattering, but it could be on its way, definitely. I suspect it is, because of what you're going to see in a sec with the bonds. That's the Eurobond. The Eurobond in themselves, they don't give. I mean, you see here on the 15 minutes of the June contract of the Eurobond futures, you see a potential for a 1, 2, 3, 4, 5. Okay, this is no mystery. I've discussed it many times. However, it is not absolutely crystal clear. It could actually be twisted into an ABC as well. Okay, because here the subdivisions here are not terribly clear. I suspect that in terms of the proportion, it is more correct to treat it as a 1, 2, 3, 4. And you can see for yourself why. Do you see the scope of the fourth wave is neatly fitting into balance with the second wave that I have here, and you have a nice 1, 2, 3, 4, 5. So I don't see really an issue, and that is a pretty important event, because you have 5 legs up, and when you flip to the daily, in fact, what you're seeing is a 5-wave march. You see an ABC right here, an ABC, and then you see a 1, 2, 3, 4, 5. So that could be the first leg of the next big bull move going up. Now the situation is somewhat clearer here in the EUROBUXL. That's the daily. There is no guarantee. It could be that I'm wrong. I'm just showing you what I think appears to be a better, clearer structure with a fourth wave ending here on the daily. Okay, and we run up here. I've taken this as 1. That's an ABC. We do need still confirmation here, and confirmation could come in the form of this, a surge above this level. Okay, then I think it will be absolutely sealed. Yeah, we got the ABC behind us. We are shooting up in a third wave. Okay, and what is really encouraging is the advance from this level, because this happens just to be just very clear. What can I say? This is very clear. You'll see exactly what I mean now. Look at the 60 minutes. This is really interesting. Look, super clear first leg. 1, 2, 1, 2, 3, 4, 5, 3. Look at a super clear fourth wave here. Would you like to argue with that? It looks really clear. And the subsequent jump. So we have an absolute textbook situation here of a 1, 2, 3, 4, 5, and of course we have potential for further upside. It could even extend. It could go into something like that. Don't be too surprised. And at some point that might take place, and you have your first leg up, ABC, and explosion, taking off seriously. Okay, stock market. That's the S&P 500 cash. That's the daily, and I'm short. I went short yesterday. I had one long that didn't play out very well. I mean, it reversed on me, and I took my loss, and I decided, okay, that didn't work, and what I'm going to do now, I'm going to reverse, and I'm going to go short. I went short S&P. Now, of course, I could be wrong. I'll tell you immediately that I could be wrong, but as I go through the charts here, you'll see why I took this decision. This is now 1, 2, 3, 4, 1, 2, 3, 4, and where's the fifth leg? Well, that's how I could be wrong. It could actually come back. Yeah, it could come back. But I took the decision, and I took this into account, and I said to myself, oh, well, you know, yeah, that's going to be painful to sit through that. But the odds are now shifting heavily to the side of the bears, meaning that we are going now to see that correction, taking it a lot lower. Okay, I think that we could experience the reversal today in unambiguous terms. I mean, I think that if it has reversed, it is, as they say, he's not going to fool around anymore. He's just going to break down through the critical line that I have here, the black line. Okay, that comes just above 2020. And that's it. That's it. There are quite a few interpretations here. As I go through the other charts, you will see that some charts, notably the Russell 2000 and the NASDAQ, the two NASDAQ that I have, the Russell 2000 is clear cut. We have 5 legs in hand. The strategy is done. It's now time for correction. Okay. In fact, some charts in the US are clearer the charts that we have in Europe. They are far more helpful at this point. So I'm short from roughly this level, and right now it is it's going down. What can I say? Europe is going down. Let's take a look at the other. Okay, this is the 60 minutes of the Nasdaq Composite cash, and you can see that we can work out a situation where we have 5 legs. It's not that we are sort of inventing it. There is a technical possibility to point out and say, hey, look, we got 5 legs. So we have 1, 2, 1, 2, 3, 4, 5. That's 3. That's 4. 1, 2. You see the 3, 4, 5. Yes. What it takes here, And that was one of the reasons why I decided to reverse and go short in a significant way, was that it was getting very close to this level. Yes, also the Nasdaq 100 was getting very, very close to this level, and on top of it, I was able to argue that I have a fifth leg. Okay, not brilliant fifth leg, but I got a fifth leg. It's not going to be like that because that was an extended first. So yeah, it did the job of providing that fifth leg, and maybe that's it. Sorry. The confirmation today will come on a slice through that. I don't think we got that yet. Let's see. I'll have quickly a look here at the S&P is continuing down, and no, pressure is still there, and within a few hours I think we will get our answer. Okay, here's the Nasdaq 100 60 minutes. That's the cash. And here you are. You can see it's a perfect set of 5 legs. And we have examined the VIX. We have examined the momentum. I've examined the structure. And I have been warning you for the last week. Be careful, be careful. Turnaround is coming. Turnaround. It's going to roll over. It's going to roll over. I think this is probably it. Well, you know that I bet my money on it, so that's it. And my target short term is this. I think that if I am lucky to catch all of that, that in itself would be fantastic. Okay, of course it could fall quite a bit lower, because we're talking about 5 legs. Okay, and the correction is not going to be 1 week. It's going to be at least, I would say, 3 weeks. We could have even something like that's going to retest 4,100. But as a first chunk, of the bearish correction here, I would be very happy just to catch that, and I will probably run out, and possibly, if I can get this right, sell it again around here for the next leg. Okay, this is the Russell 2000. That's the cash. That's the daily, and here, that is the structure that, as far as I'm concerned, is clearly indicating no more upside. That's it. That came out from a clear bottom. 1, 2, 3, 4, 5, and the scope, I mean the extent of the reversal is like saying, well, I am here to give you a clear message. That's what I take it to mean. This very sharp reversal here, it's just like, this is as far as I'm concerned, this is a pretty serious message. Yes, and I showed you the momentum, the structure is there. I think it's ready to correct now. Now here's the Italian market. Well, the Italian market broke through. As I'm talking to you, let me see. It's nearly doing it, but somehow, after having examined the US indices, I'm going along with the bear now, and I'm afraid that Europe is going to do the same. Well, as we are talking, it is breaking down. But what it needs to do here, it needs to break through. I'll show you the very precise level in a sec, but it's on its way. So it shattered the idea of the triangle. Okay, it shattered the idea of the triangle, and it has serious consequences as to the interpretation of the chart here, because I think we are going to end up having an ABC rather than 5 legs up. It's difficult to argue that we have 5 legs up. Yes, I mean, we might have to reconsider. I might have to reconsider what I'm saying now, but you can see now the damage for this triangle. We had a nice building here, A, B, C, D, E, and we were expecting a rally. It failed. These things happen. You always have to take this into account, and you always have to watch many indices, and the driving force is often the major US indices. You must not trade at all the European indices without looking at the major US indices. This is my candid advice to you. You have nothing to do with trading the European indices if you are not following the US indices. And that's one of the main strengths of my analysis and my service for those who are following the European or indices in general, is that I'm absolutely focused, laser focused on these 2 big groups of indices, and they are so correlated that you never want to do something without checking the whole bunch. Okay, and look here, it is coming very close to the critical level. Breaking through that, I think nothing is left really. It could go down. I do not necessarily forecast a complete collapse. It could sort of go into a mess about here, and I need more time to think through all that, but that is obviously negative, definitely negative development for the Italian market short term. Although technically, if you like, the pure technical approach would say it's not dead, the fourth wave is still available, still possible. Okay, but as I said to you, the momentum and the situation in other indices is strongly arguing to be very cautious with any longs. Now here's the EU Stocks 50, that's the daily, and treating the run here as the first leg up of a possible major bull market, taking this as an ABCX AB, and that's basically what I want to say. You see, we were taking this as an AB, but we were expecting a further push up here. It didn't come. What could happen, of course, is that the entire price action would morph into a triangle. The EU Stock 50 will not make it, if you like, will not make it as a nice ABC, but will actually stay under overhead resistance right here and end up giving us a triangle, a choppy price action triangle before final washout, and maybe then is a resurrection. Let's go now and see it from close. You see, we were looking at this possible structure. Yeah, you remember that, ABC. Now obviously this is not coming to pass. This is it's too weak, it can't make it. There are multiple options that could open up now, but what I see here is that we don't have 5 legs clear, and I see that the market could be actually either leaving behind already a B, in which case it could go down now and go down quite a bit. The problem that I have with this interpretation is that the A that the B is relating to, the A took more than 2 months, and somehow I don't see prospects for more than, let's say, at most 1 month correction in the US. So it appears to me a bit mismatch here, that the US after 3 or 4 weeks will turn around and start running up sharply, while this one would require at least another 6 weeks to complete the C. But that is the major mismatch that I see at this point. Otherwise, it is weak. It is not preparing to run up sharply anytime soon. In the next several weeks, it's likely either to stay range bound at around 3,000, 2,800, or if it reaches the floor here, it's likely to continue lower. Okay, here's the Spanish market. We had a perfect looking setup here on the daily of a 1, 2, 3, 4, but the market is not holding this option right now. It is not supporting it. It is actually coming under severe test here, as you can see. And again, like in the case of the Italian market, it's not completely dead. The purists can still argue that this is an A, B, C, D, and that's an E. And I have nothing to say. Absolutely nothing to say. It can still work out. Okay? But I think it is becoming, it's looking to me like it's becoming really weak. What will take is to clinch the bearish case, is just a crack through that. And I don't think we got it yet. Let me have a look here. No, we are not there yet. It is just leaning here on the floor, which is obviously not good news for the bulls. Time to be very cautious. My advice to you, if you are long, put extremely tight stop or just get out. Get out. If you have profits, be happy with what you've got. We don't have to be dick for a tick. You know, we don't have to try to squeeze the last bit. You know, because if you have profits at this level and you don't take them, and this doesn't take place and it sinks, well, you understand. Okay, here's the CAC 40 of France. That's the daily, and you can see it's coming very close to the critical level that will wipe out the option of the triangle. Let me see where it is right now. It is in a similar situation like the Spanish and the Italian. It's really leaning on the floor. It's right here. Okay, so by the time you see this video, definitely we could have maybe a decision. Cracking through that, the French market could go way lower. Okay,